Hey there, this is Enea, and I'm very excited to introduce you to the Options Simulator. It's a tool I've been working at for a while. I find it already very useful, and I hope you will find it useful too. And this is a tool that is built to help anybody investing in Bitcoin options, from IBIT to treasuries to miners, to set realistic expectations by testing their trades with their own assumptions. So simulating the returns of a specific trade. So for example, here we can either select tickers. We have 25 plus tickers, or you can input your own simulations parameter. But let's say we select a ticker. So as you can see here, we have treasuries like MSTR, we have miners like Cypher and Iron, we have preferred stocks, but also IBIT and ETFs. So I select IBIT in this case, and let's say I want to buy a contract a bit more out of the money, a call contract out of the money at 70 that expires end of the year. And it will allow to fill with the last close data. So in this case, the last premium the available yesterday was 350, but let's say I had an entry point, an entry premium a bit higher because I already entered the trade, and then I can select my own scenarios. So I'm a bit bullish, so I think we will reach at least, let's say we reach 84, and the implied volatility will also change, will increase, because there will be more demand for these options. So and we can see already how the everything here is moving, but we get to that in a second. First, we can look at our simulation. So there are simulation assumptions about all the features that we used here, and then we have the simulation results at expiration. So what will be the expected premium if the price moves, as I said, plus 33% to $84, and expected option net return. So given how much we paid, how much we will have back. In this case, we see it's 267% return if at expiration the price is 33% higher. And then it's very important actually to compare this to the returns of just holding the underlying. In this case, the returns would be just 33%, which gives us 234 percentage points of incremental returns in this case. But then if we want more insight, we can look at three very interesting charts. One is as simple as the net percentage returns versus the stock price at expiration. So depending on where the stock price is at expiration, we can see our returns. Net returns means also accounting for the premium that we paid. So we will break even at $73.81, but if the stock price increases, for example, moves towards 81, we will start to increase our net return. And we have this curve that is incredibly useful to understand what can we expect based on the stock price. Of course, below here, we will lose everything. Then also this graph shows how the premium decays if the underlying price stays flat. So if nothing happens, our best bullish case doesn't actually happen, how much we will lose every day. In this case, this option is not in the money, so it's all red here. We are not in profit, so that's why it's all red, and we see how we can expect to lose every day. And of course, how much implied volatility there is, how much demand there will be for this option until expiration will increase, how fast will impact how fast we lose our premium bleeds or decays. We can see how, for example, by increasing IV, our decay stays flat. So our option premium also increases slightly before starting to decrease. And now the most valuable chart of all, which is the option value heatmap. Here we can see how, as the stock price or the underlying price changes according to our simulation parameters, and across time, our returns, our expected returns change. For example, in this case, we have chosen a very bullish scenario, but let's, for example, make it less bullish, a bit more, still bullish, but a bit more neutral. For example, with an expected stock price change of 16% and expected IB change, we see we reduce it to 30%, and we see how, for example, the returns over time change. We would not be profitable at expiration according to these simulation, these parameters, but still we could, if the price moves fast before December, then we could still achieve quite substantial returns, even above 100% if the price moves fast within the end of October. I hope you will find this tool very useful, and you can test it today with just a 3-day free trial that allows you also to access the Performance Explorer, where you can check historical performance of contracts across Bitcoin treasuries, Bitcoin miners, and ETFs, and also preferreds. We are showing here all the historical data from the premium change versus the price of the underlying and other contracts, the contracts you select, also the premium's percentage change, very useful for returns, and other performance metrics such as implied volatility and the Greeks.